Hello students, today we are going to start our last chapter of Accountancy class 12th, that is redemption of debenture. In this chapter we are going to study how the issued debenture is redeemed. From this chapter all the methods are not coming in examination, so the theoretical part are very important from this chapter. So let's start. Company's account, redemption of debenture. Redemption of debenture means repayment of amount of debenture to the debenture holder or discharge of liability on the account of debenture. Redemption of debenture, repayment of amount of debenture, that means the amount will be repaid to the debenture holder. In other words, the debenture refers to discharge of liability on the account of debenture by repaying the due amount of debentures. The terms and condition of redemption are stated in the prospectus which is issued on inviting application for the debenture. The company is authorized by its article of association, and the terms of issue and redemption or redeem the debenture before the due date in prospectus. Conditions. The following conditions are written at the time of redemption of debenture. First is the time. Debenture are normally redeemed on the due date. At what time money will be paid back? The first one is lump sum on the specific date, and second on one installment. The amount, how much money paid, the debenture can be issued at par, premium and discount, and in the same way the debenture can be redeemed at par or premium, but debenture cannot be redeemed at discount. Mode, how the company will pay, by the way of cash or through the check on the due date, or by way of issuing equity shares of the company on the maturity date. Source, the debenture can be redeemed out of capital or profit. If the debenture are redeemed out of capital, it means no effect on the profit. It will reduce the cash and liability only. If the debenture are redeemed out of profit, it means the same amount will be appropriated out of profit of the company. Debenture redemption reserve. For the redemption, the best source is out of profit. There is an institution called Security Exchange Board of India, that is SEBI. This body was exercising the controlling on this point. It has told the company that you have to redeem the debenture only out of profit. One more thing that you must keep in mind, a minimum 50% of amount which you have to redeem in a special account called debenture redemption reserve, and this is very important account to be maintained. Where from the DDR is made? The DDR is made out of profit. DDR here is debenture redemption reserve. Which profit? The profit available for the dividend, and the company earn profit. It pays tax. After paying the tax, the profit is available for the dividend. From that profit, company maintain DDR. The out of profit is available for the dividend. Transfer 50% amount due to be paid to DDR and not use it for any other purposes except redemption. This was the direction of SEBI. But what the company are keeping for redemption is 100%, but minimum is 50%. It can be more than 50%. Sub rules are, it says all company will create DDR except two company, banking companies and all Indian financial institution regulated by RBI. Under section of Companies Act 2013, all company will now create DDR compulsory not less than 25. The SEBI rule is still stands for 50% and minimum 25 of the amount to be redeemed. It must be kept in DDR, but more than this will be 100% is allowed. Rule: this disclose the intention of the government to ensure that company should earn profit with the borrowed money. It must not misuse the money. Therefore, 25% of the amount due this year is transferred to DDR before you start thinking of redemption. Part says that the timeline is 1st April 2014 to 31st March 2015, and this is the 1 year the debenture have to be redeemed here. This redemption date 31st March is coming every year, and every company before 31st April must have fixed deposit or any unused bond not less than 15% of the amount to be redeemed on 31st March every year, so that on the redemption date the company does not find situation that they need cash in hand. DDR in balance sheet. How you will show DDR in balance sheet? DDR is shown in equities and liabilities part of the balance sheet under the head of shareholders funds and subhead reserves and surpluses. When all the debenture have been redeemed, DDR account is closed by transferring the amount to general reserve. The entry will be passed DDR reserve account debit to general reserve. Companies Act 2013 for redemption. There is change in Companies Act 2013. In the Act under section 71 4th, every company which is using debenture must maintain DDR, and in which they should be used only for redemption and not for other purposes. The other important thing is the Lok Sabha allowed the government to frame the rule how this section will be applied, how to ensure that the company do this has been inserted for the first time. In 2014, the Government of India has come out with the rule, and those rules are under section 18(7). It is applicable everybody has to follow. If any Company Act is not followed, will be punishable under this Act. Methods of redemption of debenture. The redemption of debenture in lump sum method. All the debenture are redeemed on redemption date as specified in Article of Association on the maturity at the par or premium. When debenture is redeemed at par, the journal entry will be debenture account debit to debenture holder, the nominal value. On the payment, debenture holder account debit with whatever amount you pay by check or cash. When the debenture are redeemed at premium, so account will be debenture account debit with nominal value, premium or redemption of debenture debit to debenture holders. Okay. The extra amount paid by the company in the form of premium is a loss to the company. Therefore, it is debited by the loss on the issue of debenture account and credited to premium on redemption of debenture account. It must be remembered that the premium or redemption of debenture is a personal account and it is the liability of the company. At the time of redemption, the premium on redemption of debenture account is debited as a liability is paid. The purchase of own debenture from the open market for the investment purposes. On the purchase of own debenture, investment is own debenture will be entry is investment in own debenture account debit to the bank as you paid in cost by the check, and the company must decide to resale of own debenture and the entry are passed bank account debit, loss on the sales of investment in own debenture, okay, and to investment in own debenture account credit to gain on the sales on investment on own debenture. On the transfer of gain on the sales on investment, Gain on the sales of investment in own debenture account debit to statement of profit and loss account. On the transfer of loss in the sales of investment, statement of profit and loss account debit to loss on the sales of investment in own debenture. The gain on the sales of investment in own debenture is shown under other income in the statement of profit and loss account. Loss on the sales of investment in own debenture is shown under the other expenses in the statement of profit and loss account. On the cancellation of own debenture, debenture account debit, loss on the cancellation of own debenture to investment in own debenture, and if there is gain, to gain in the cancellation of own debenture. Gain on cancellation of own debenture is a profit of the capital nature, so it is transferred to capital reserve. As in the previous video I told that capital reserve is made out of profit. Capital profit. Loss on the sales of investment is shown in other expenses. On the transfer or gain on the cancellation, gain on cancellation of own debenture account debit to capital reserve. Treatment of investment in own debenture in the balance sheet. The own debenture purchased for investment purposes are shown at the cost in the asset part of the balance sheet under the head of current assets and subhead current investment. Advantages of redemption by purchasing in open market. Gain on redemption. Own debenture are generally purchased at a time when they are trading below the par value. The company gain on this redemption nominal value of the debenture being higher than the purchase cost. Reduction in interest burden. The company saves on interest payable on debenture held by outsider. Saving amount equal to the premium payable on the redemption. The company will not require to pay any premium on debenture redemption in this case. The treatment on interest on own debenture. When the company purchases its own debenture and has not cancelled them, interest become due on these debentures. The company will debit interest on the total debentures including own debenture held by it. However, it will pay interest only on debenture held by outsiders, and interest on own debenture is retained by the company. When the interest become due on debenture, debenture interest account debit to debenture holder account. On the payment of interest on debenture, debenture holder account debit to bank. Debenture interest account is shown in the statement of profit and loss account in the expense part under the head of finance cost, and the interest on own debenture account is shown in the income part under the head other income. So here the video ends. If there is any doubt, I will make revision video of every chapter so that you are able to do best in your examination. So here your book ends, and now we are going to revise all the topic in next video. Thank you.